Good morning and welcome to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. And there is the bell for everyone that is listening. The cash market's up and running. Hey, I am joined by my good friend, Mike Fairborn, out in the chat today, 20-plus year veteran of the financial markets. He teaches this class on a regular basis as well. And I suspect with my travel schedule, he and I are going to be going back and forth on this class. So you're going to see him here on a fairly regular basis as well. But he's out there in the chat to help answer your specific questions regarding this discussion. And I noticed that our usual suspects here in the chat today seem to be in a pretty good mood this morning. So we'll see what's maybe driving some of that good mood, if that is the case in the markets as well. But thanks for joining us here in the chat today. For those of you that are here live, for those of you that are here on the recorded version, thank you for coming as well. We're going to take a look at what's going on in the market today. We're going to ask the question, do rate changes impact our focus and our look and our view at what some of the index futures are doing? And we're going to do that with a couple of quick housekeeping items that we need to take care of. First of all, remember that everything we talk about is simply for illustrative and educational purposes only. Remember that futures and futures options trading involves substantial risk, not suitable for all investors. In fact, it requires separate trading authorization. Remember to read the risk disclosure statement for futures and options prior to trading any futures products. Remember that futures accounts are not protected by the SIPC. Also, remember that as we talk about these ideas, we're going to talk a lot about technical analysis. Technical analysis is only one way to look at the market. There are others: fundamental analysis, probability analysis, macro economic analysis, and others. All of those are theoretical in nature. None of those are guaranteed. And remember that Schwab doesn't recommend the use of technical analysis as a sole means for investment research. Make sure that you carefully consider whether trading in any of these products is appropriate for you in light of your experience, your objectives, your financial resources, and other relevant circumstances. Now, the other thing to think about as we talk about these discussions today, we talk about futures contracts, we talk about trading futures contracts. Remember that not only do they involve risk, including for some products more than your initial investment, but also remember that stop orders in futures products are a little bit different. Number one, they're not guaranteed in execution due to exchange rules based on certain conditions. The time that those orders are activated, the exchange may reject or substitute an exchange-designated limit order for protection using protection points that those exchanges use for those circumstances. So be aware of that. We'll talk about those circumstances as we get into the discussion. So today's a little bit, well, I don't know that it's news heavy. I mean, this has been a news heavy week. And as we kind of roll into this discussion, there's a couple of things that I want to talk about. One is news flow, and two is the impact that treasuries have on indexes, because we're going to look at a comparison between the two. We're going to look at some of the influences here. So treasury futures, generally things like yield futures, for instance, or even the bond futures, may give us an indication of what direction those yields are going, right? As interest rate yields fall, treasury futures rise. So that's kind of the opposite relationship, or that inverse relationship. As the bond prices move up, yields fall. As bond prices move down, yields rise. And so that inverse relationship, we need to kind of keep that in mind, right? And what influences those yields? Well, it's partly the Fed, number one, partly though bond traders. Are they buying or selling bonds? And when they buy or sell bonds through the use of auctions or through the use of transactions, that can push yields up or down. When yields change, that influences sectors of the economy that are sensitive to interest rate changes, for instance, right? So small caps, for instance, small cap stocks, small financial stocks, small technology stocks may be influenced by interest rate changes and changes to yields. Mortgage rates are changed by yields to a certain extent, right? Because many mortgages are tied to things like the 10-year yield. And because of that, that can influence various sectors of the market. So we're going to talk about this relationship between what yields have been doing and what index futures, specifically in this case, what I've been watching this morning, and we'll jump into this here in just a second, but what I've been watching this morning is this relationship between the 10-year and the Russell 2000 small cap index futures. And so we'll see that relationship here this morning. The other thing I want to look at really quickly is what's going on with gold, because we're starting to see a little bit of a change in gold. We've got some things coming up. We've got retail sales numbers today. We've got initial jobless claims. We have energy stockpiles yesterday, but we're on the cusp of, number one, a holiday shortened week next week. Number two, the cusp of a presidential inauguration and changeover. So changeover in administration, which may bring a change or may indicate for the market a change in perspective. So we're going to look at that. Again, not getting into the political, just looking at the reality of the fact that we have a changeover in administration. So we're going to talk about that as we get into this discussion. So I'm going to pop over here to the thinkorswim desktop software platform. And again, this is the paperMoney version of the thinkorswim desktop software platform. Not a guarantee future success out there in the real world, but a great learning environment. We're going to take a look at the grid that I have here, which is the three major indexes in this particular case. This is the ES, the /ES. This is the E-mini S&P 500 index futures. I've got the /NQ, which is the NASDAQ futures. And then I've got the /RTY, which is the Russell 2000 E-mini. This is the one that I wanted to pay attention to. Primarily, we can kind of see a little bit of a change here, but this is kind of that one of these things is not like the other. One of these things just isn't the same kind of perspective here, because the Russell's been doing something a little bit different than the other two indexes have been doing, and kind of looking at these indexes. So I've got RSI, relative strength, or relative strength index down here as a technical indicator. There are other technical indicators that we will use, but what I've noticed in both the /ES, the S&P 500, and the NASDAQ is kind of this perspective, if we want to look at it this way. Diagonal resistance breakout. And we're seeing that diagonal resistance breakout today as the cash market starts to get up and running. We're starting to see it on the cash market indexes themselves, the index futures doing the same thing, kind of seeing this little bit of a bounce, not only off of a horizontal, but perhaps also off of a little bit of a diagonal support level. And in fact, breaking, in this case, at the moment at least, breaking the 50 period simple moving average in this particular case. Now, what's kind of interesting is we're seeing a little bit of a bullish divergence in that the futures contract itself, the numbers on the contract, hitting that 50 period moving average, we're starting to see a little bit of a bullish divergence on the RSI, on the relative strength index. That's telling me, simply from a mathematical perspective, because that's what this particular number is doing, or this particular technical indicator is doing, is simply looking at where prices are closing relative to highs and lows in each individual candle over the past 14 periods of look back. So what we're starting to see is a little bit of a bleed higher, right? These candles are starting to close closer to their highs, even though price may be lagging a little bit. So we're seeing a little bit of a momentum push, and that can be kind of like spinning your wheels as you start to gain traction. There's some momentum building, but price and forward movement hasn't yet kind of reflected that increase in momentum. And we're starting to maybe see that increase in momentum catching up with this break of the diagonal resistance. Now, we're starting to see the same thing on the NASDAQ, right? And I would argue that perhaps in this particular case, we're kind of right at that diagonal resistance, because we saw the break of the 50 yesterday in the NQ futures, but then banging its head on that diagonal resistance. Now, some of you technically are going to say, look, this is a discretionarily drawn, meaning I drew it where I saw it, right? This is a discretionarily drawn level of resistance, and I could have drawn it in a different place that would give me a different result. But I drew it to the levels that made the most sense, right? I touched this high and this high and this high, kind of right in that area, and kind of continue that line down. So 2 points make up a line that establishes that directional move, and we've got the 50 period continuing to move higher here. We've got the RSI, though, if we were to take a look at where this is, and I'm going to draw from the high, which is corresponding with our higher high here on the price, and I'm going to just draw across the ones that make the most sense. I could draw it here, but I think I want to draw to this one because I think this line makes the most sense, which gives me not yet necessarily a bullish divergence in the NQ, because I'm not seeing a new higher high like I am in the Russell or in the S&P. Look, here's a high, here's a higher high. That's the S&P 500. But here's a high and here's a slightly lower high. Nevertheless, it's breaking that diagonal resistance kind of. If we think about that concept for the RSI, it's not necessarily resistance because this isn't a tradable part of the instrument. This is just reflective of what's going on here. But we are seeing a break in kind of the trend, if you will, of what RSI has been doing. And that's suggestive of an increase in that momentum in the short term. Now, will it break the resistance level? I don't know. That becomes the question, right? We could, again, argue that we've got kind of this, depending on where we draw this, maybe a falling wedge. Falling wedges typically tend to be bullish as a price pattern because it indicates kind of a confluence of support and resistance. Buyers stepping in at slightly higher prices, sellers pushing down to slightly lower lows. So from a technical analysis perspective, this falling wedge is much like a flag. It's much like a pennant. It's much like a horizontal consolidation. It's much like a symmetrical or a descending or an ascending triangle in that it creates an expectation potentially of continuation, right? Trend coming in is bullish. Trend coming out is likely to be bullish if that happens, if it breaks to the upside. So, thinking about this from a longer term perspective and just kind of putting our ideas together here, this trend coming in is bullish. We get this squeeze, and whatever that squeeze looks like, whatever that consolidation looks like, it doesn't really terribly matter that much. But this tends to be a bullish continuation pattern if we get the breakout to the upside. And we've got some ideas supporting that, and that would be that break of the RSI trend line, giving us an indication that maybe something has changed within this. Something is not the same, right? And we've seen kind of the NASDAQ, the Mag 7s, maybe seeing a little bit of relief and a little bit of a push higher. Now, not all of them, right? And they're not the entire consist of the /NQ, the NASDAQ futures, of what it reflects, right? There are other components to that, but this kind of bullish extension is something that could be that if this, then that scenario from a trading perspective. If price breaks this rising wedge or this falling wedge to the upside, then trend is likely to continue in that bullish direction. And a swing trader, somebody trading from a support to a resistance level, might be looking to close a trade down as it gets close to that resistance, in this case, up around the 22,100 mark or so, or higher, or looking at this being kind of that bull flag perspective and looking for some kind of a flagpole type of measured move target, right? So given what we're seeing here, I mean, that's kind of the collective technical analysis thought process that's going on in this particular index, different slightly from what's going on in the S&P 500, but not terribly much so. What is a little bit different, though, is what's going on here in the Russell 2000, the small caps. And this is kind of where I wanted to focus our efforts. We had retail sales, and a lot of retail sales numbers are impactful to companies within the the Russell 2000, right? Small caps, right? And that means that retail sales numbers may govern their profitability, right? So as we look at this, right, um, we kind of look at this as a little bit different shape, right? We saw this downward move. We were seeing yields rising very, very sharply post-election. So post that November timeframe, yields rising was bringing the Russell down, right? I mean, let's say what it is. I mean, these are companies that are sensitive to higher interest rates because they have higher borrowing costs. They live and die in a lot of cases by that borrowing. So a couple of questions that I wanted to answer as we kind of get into this. First of all, I'm going to answer Koala's question, which is why Wilders instead of a simple? And Wilders in this particular case, so Wells Wilder, the technical analyst, the technician, the mathematical, not evil, but diabolical, I would say, diabolical genius that created the RSI, that created ATR, that created parabolic stop and reverse, that created, in a large sense, the CCI and the ADX and DMI. I mean, a lot of these technical indicators have come from the genius of Wells Wilder, and he used his own moving average, the Wilder's moving average, as kind of the central construct of these technical indicators. And so this is the default. That's why Wilder's versus simple or something like that. And because of that, I'm going to just keep it as the default. You could use a simple. That's fine. And you're not going to see that terribly much of a difference between the Wilder's smooth moving average and the simple. Normally, I'll use simple. You'll see that I've got simple on the charts, right? So sideline, just if somebody creates an index or an indicator, generally, unless there's a good reason to change from what the creator created, I'm not going to change very much, right? So. But let's look at where we might draw resistance levels here in this particular case, because this is a kind of a circumstance where maybe we've got a couple of things building, right? We could probably argue that if we were to take this, what was a support level, right? Support on this bounce, that double top, support on that double top. And if I were to just activate that, we'll kind of extend that across to the right. But that's kind of what we've seen, right? We've seen this bounce up off of this level at right around the 2195, almost the 2200 level. And remember, markets like big round numbers, like 2200, like 2100, like 2000. And we've seen once, twice, 3 times, 4 times, 5 almost, 6 times bouncing up off of that level of support in this particular case. What I maybe also see being created here, and if we see a failure at this point to break higher and a failure to get above that 50 period simple moving average, would be potentially a break of the 200, because that's where we are, right? Let me grab my magic marker at this point. And if we come in here and we take a look at what's going on, we've got this kind of confluence now between that 2190, 2200 area of support, confluence with the 200 period simple moving average, which has seen a bounce once, seen a bounce twice, seen a bounce 3 times, and now potentially seeing a bounce 4 times. But could that level be broken if we see rates continuing to rise? And that's generally the way that rates have been going. And if we were to overlay rates on top of this, we could see that relationship. But notice what's going on here, right? We're starting to see the RSI moving a little bit higher, but kind of failing at these previous areas, kind of right in that area, right? So not really gaining some strength, kind of sitting right in the middle. We could look at this as a couple of ways. Look, you've also got the possibility that this becomes maybe this kind of lumpy head and shoulders type of pattern, which is potentially ready for a failure or testing for a potential failure. And if that's the case, then we might see that move, from this area down. And then if we were to take that and put it down here, we might see this move back into these levels sub 2000, right? So, markets like symmetrical moves. That's why we look at price patterns as giving us symmetrical moves, but we're not quite there yet. right? We're not seeing that break to the downside below that 2200 level. So what do we have to do now? Well, we have to look at what it's going to do or what it might do in between here and that neckline of that big head and shoulders pattern, or that big possible potential head and shoulders pattern, and then it's not there, right? Now, the other side of that coin is that on a shorter term basis, and I like this, and I like the conversation that's going on here, is, hey, maybe this is at the same time, there's the head and the possibility of this breaking out and moving to the upside, which that possibility, if we were to draw the lines here, let's draw this down to that support level, and let's grab it, and let's put it up here on top. That would put us potentially up around that resistance level, up above 2400, right? So yeah, I mean, here's the thing. If we see this break in the upside, there's a potential for some upside movement. We see the break to the downside below the 2200. So now we're kind of defining our if this then that levels, right? If this breaks higher than this 2300 level, then we see potentially move above 2400. If we see it break below this or fail at this and go down to 2200 and break that 2200, then we're seeing it down sub 2000, a little bit bigger move to the downside, right? Now, AC asks an interesting question, right? So does this mean that if we see rates continue to rise, Russell 2000 continues to the downside? So you know what I'm going to do on this chart right now, really quickly, just to illustrate that, okay? Yeah, it absolutely does. Carol, I agree with that. So AC, this is for you and for everybody that's kind of trying to struggle with this discussion of, well, wait a second, if rates do this, what does the Russell 2000 do? So what I'm going to do is, so let me just illustrate this really quick, and I'll come back to the RTY. I'm just going to use this /10Y is the futures contract that displays rates, right? This is the equivalent on a futures basis of the TNX, right? The TNX being the 10-year yield for the 10-year bond, right? This is where mortgages are drawn from. This is where a lot of credit card rates are drawn from, those types of things. What's been going on in the course of the last 6 months or so in yields? They've been moving higher. Short term, we saw a big drop in yields yesterday, now a bounce on yields on the 10-year futures, right? So let's do this. I'm going to come back. I'm going to go /RTX. That's whoops. /RTY. That was the futures contract that we were just looking at. So if I do this and I go to my Flask icon up here, I'm just going to go and I'm going to put in COMP, comparison. And so I'm going to put in a comparison line on here. I'm just going to go to my gear icon and I'm going to make the symbol /10Y so that you can see this relationship between these two. And I'm going to click on OK and apply and OK. Aha. So now we see that inverse correlation between the yield and the Russell 2000. Now, it's not absolute, and you get some general trend direction simply driven by economic forces. But it is an inverse correlation enough that we can use it as a potential indicator of what's going on with short-term rates. So short-term rates are back on the rise, right? That's what we're seeing in that pink and that line, right? Okay, so the symbol for the 2-year is /2YY, 2YY. So let's do this. Let's change that correlation line or that comparison line while we're here, and this is a good way to think about it. Let's go back up to our gear icon. Let's change this by going to the gear icon right here, and we'll do /2YY. And we'll see if this is sensitive or more sensitive, potentially, or more inversely correlated to the 2-year interest rate. And in this case, the futures contract that represents the /2YY represents that 2-year treasury rate. Now, this is a shorter term impact. Shorter term risk generally is a little bit more expensive and a little more volatile. But at the same time, that we're seeing a strong move on the long end of the yield curve out at that 10Y and out to the 30Y, the 30 year. So let's see what the 2 year is doing. Let's click on OK and apply and OK. And you see still an inverse correlation, but not quite as strong an inverse correlation. That's because this typically tends to influence the 2 year, typically tends to influence maybe a lot more fixed income traders, but not necessarily the borrowing costs specifically of small cap companies that really realize the influence of those rate changes, right? So it is an influence, but it's not as strong an influence here in this particular case. So we're going to go back, we're going to change that comparison line back to /10Y. And we're going to put that down here, 10Y. We're going to put that, whoops, that's 10Y. Let's put 10Y actually in there. And we're going to pop that in. We're going to click on OK and apply, OK. And now you see that inverse correlation. So now that we kind of have that sense in mind here, what I want to shift to from a trading perspective is looking at fading this little bit of a push to the downside on the RTY, but we're going to do it with the micro contract. And so what I'm going to do is I'm going to shift down here to a different grid. This is my futures grid, kind of looking overall. And by the way, I can share this with you really quickly here. I'm going to go share grid. And I'm going to click on share and we'll pop this out here into the chat. I'll also put this in the description for the webcast. Remember, anytime we share anything, it is number one for illustrative and educational purposes only. Number two, it's not guaranteed as to time or accuracy. But there's the my shared futures grid with those three futures that we were looking at. And by the way, now, since I shared it, it also includes that comparison of yields to the Russell in this case. But I'm going to shift my grid over here to my futures. I call it my futures movers grid just because I use it for one of the shows that I'm a frequent contributor to on the Schwab Network, which is brought to us by our media production affiliate, Charles Schwab Media Productions, which is a separate but affiliated company, not a broker dealer, not a financial advisor. They're simply a media production company. So the futures movers grid, if I click on that, we're going to come back down here. And I have it currently on the micro crude contract. By the way, we're taking a look at crude oil, which has been making a big move to the upside. But let's pop this over to /M2K. M2K is the micro Russell 2000 futures contract, M2K /M2K. And you can see the size here. Tick value or tick size is 0.1, tick value is 50 cents, point value is 5 cents. And if I were to maximize this sell, notional per contract is 11,348. If we were to contrast that to /RTY, you can see the notional here. So tick value is still $5 instead of 50 cents. Point value is $50. And the notional size per contract in the large contract here, even the E-mini, is 113,370. So that's why we're looking here in this particular case at the /M2K, just from the standpoint of size. The notional value of the contract's 11,000 instead of 113,000. And our point value is a little bit smaller. But what I'm going to do is I'm going to restore those cells. Left-hand side is a one-year daily chart with the CCI, Commodity Channel Index. Trend strength gauge is what I look at that CCI as being. Above 100 or below 100, strong uptrend or strong downtrend. In this kind of middle ground here, kind of calling that the absence of a trend. And I would argue that that's kind of where we are on a yearly basis here, on kind of that longer term perspective. 1 year daily view, daily candles, lack of trend. We're kind of right almost in the middle of that +100, -100, no man's land. But notice what's going on here on the short term. This is today's trading 15-minute chart. And I was looking at this level on the short term as kind of the holding point for this move to the upside. And so my if this then that statement was, well, if this breaks above, then I'm going to look for a reversal. And I'm going to look for a pullback and a break below that level. So notice what's gone on in just this last 15-minute tick as we've been talking about this. This has made that move to the downside, broken down through that support, right? And it's now broken down through another potential area of support. Michael, can you handle that notional question while I'm working through this? All right, so breaking down through this level, rallying back up, retouching that resistance level. So my thought is this: absence of trend on the longer term chart, rising rates in the short term, number one, or number two, right? Number three, a break below, above and then below. So we have this kind of pop up and then sell off on the short term, and then this pop down below the support level area that this has been kind of going sideways in over the course of the evening. And now seeing this push to the downside using the MACD as a momentum indicator here in this particular case. So my thought is going short the /M2K and looking for this continued push to the downside, using the shorter term chart as a means to look at getting into this trade. Now we're right about 2267. And looking at the possibility of getting out of this trade or even holding on to it if it goes below that 2191. So that's where I'm going to put an alert here, not necessarily even putting a stop or any kind of protection order in place, because remember, again, those are going to get worked as limit orders by the exchange because of those protection points. But if this continues to move through that level, I want to see that continue to move to the downside and potentially be an indication of this break of the kind of head and shoulders type pattern that we were talking about before, right? So looking at this possibility of moving, so we're getting a little bit of a rally here. So we're going to fade this. I'm going to do two things. I'm going to right click and I'm going to activate this drawing, and I'm going to extend this over so that I've got my level in place about that 2190. Second thing I'm going to do is I'm going to right click and I'm going to go create an alert on this. And I'm going to say, if this moves at or below 2190, and we'll make it 2190 even, set alert, because then I want to do something. And then I want to pay attention to this. And I'm going to leave that alert in place, right? So I'm going to click on create. Now I've got that alert to let me know that something is happening, that something being continuing to move to the downside. So we're looking at the possibility of trading this from where we are right now at about this 2261. Now, granted, it's making us a hammer candle. The hammer candles without follow through are simply just an indication of short term, whatever the candle period is, transfer of power. So we're kind of seeing this, looking again for this to move to the downside. Now, the other side of this coin is, if this moves back up to this resistance level, the 2274, I want to look at taking this trade off. So on this chart, I'm going to right click and I'm going to set an alert here as well. So I'm going to create an alert. And it's going to say, if this goes at or above 2274, then let me know, because at that point, I want to look at taking the trade off. So we're going to go ahead and we're just going to go short the futures contract here at this point at the market. Looking for that move to the downside. So we can do it a number of different ways. I can come over here to the bid price, and we're just going to go bid, and we're going to go sell a single contract of the M2K micro Russell 2000 futures. We're going to do it at the market here, and actually we're going to do it on a limit order. So that's going to get worked. We're going to look for that to get into the trade. We're going to sell it. And we haven't locked that up yet. So we're going to go ahead and click on confirm and send. We're going to make sure that this goes into our futures contract here, or our futures group. We're going to read through this order, make sure that that's what we want to accomplish. Remember, paying attention to transaction costs. These are exchange generated transaction costs, so that we know that that's going to be part of the function here. We know that what our cost is in the trade, at least from that transaction perspective and getting into the trade. We're going to go ahead and click on send, and we're going to fire that order off. and we're going to look at getting into that trade. We might have to work that a little bit here in terms of that limit to see if that gets filled. So we're going to come back over here to our monitor tab. It's in our working orders, and we're sitting at 2265.40. You're going to go back to the chart here, 2265, and it now filled for us. It made that move to the downside. And so now we are short this one contract at the moment of the M2K, looking for this to move to the downside. And boy, just as soon as we hit that, the candle, that hammer candle turned green and it started to rally up against us. Boy, has that ever happened to you? I don't know if that's ever happened to you, but it happens to me more often than not. Sometimes, maybe, I don't know if that's true. That's just is that, you hit something and you get into the trade and it immediately reverses. Now that might be a function of the fact that, maybe we're creating some movement in the market, but it happens in paper money too, like this, when I know that this trade isn't necessarily influencing the market. So it's like, wait a second, did I just make a decision at the point where the price, it probably means simply that there was a hidden level of support or resistance that we didn't pay attention to, right? So we're going to continue to watch for this to move to the downside. Okay, so Mark is the current displayed midpoint between the bid and the ask, time to focus. And last is the last transaction. So yeah, good. Thanks, Paul, for answering that question. So notional value, Ocean Life, is simply the point value times the price of the index, right? Oh yeah, market makers are, Vlad, exactly. The market makers are watching, right? Except that the market makers are computers, so I don't know how much they're going to be watching. Well, maybe they are watching. Oh, now we're getting into paranoia. I don't know. All right, so we're going to keep an eye on this. So here's the other thing that I wanted to look at really quickly. Remember I said that gold was kind of making a move too, right? So if rates are going up, typically gold tends to rise too, because it kind of sometimes is perceived as that inflation hedge. So if we did this /GC, look at what gold's doing. Gold's potentially breaking out of this kind of horizontal range here, this kind of ascending triangle possibility. So, and I want to look here and let's see, do we have a micro gold contract? We do, don't we? Let's scroll down. MGC, yep, micro gold futures. So look, more of a descending triangle breakout here. So I'm going to look at getting long this one, right? Simply from the standpoint that I want to look at that break to the upside. So we're going to do this quickly because I don't want to run out of time. Thank you for protecting me, guys. I appreciate it, Carol, very much. So I'm going to look at setting an alert, in this case, kind of down here on that diagonal, right? So I'm going to right click and we're going to create an alert. And we're going to say, fine, I'm going to get out. I'm going to look at getting out if this breaks at or below, in this case, that 27.24. We'll make it 27.24 even, right? So that's my alert to the downside. And again, remember, this is going to require me to take action. But then I'm going to look at getting into this trade and trading this to the upside on that upward movement. Now, there's a possibility. We've got a down candle here and a little bit of a decrease, but I've got strong bullish trending CCI indications here. So I'm going to look at getting in. We're going to right click. We're going to buy a single here in this particular case, and we're going to put this order over here. Read through the order, make sure that we're aware of that. I'm going to buy it as this is starting to move. 24.75. We're currently sitting at 27.45. I might edit this a little bit, give it a little bit of room to move to the upside. We'll make it up to 27.47. We'll click on confirm and send. Read through the order, make sure that goes into the correct group, and we're going to get into this micro contract. Looking at trading this to the upside, and we'll see if that, boom, there we go. Yeah, notional value is the actual value. If it were a stock, it would be the price of the stock times the number of shares in the contract, right? That would be the notional value. In this particular case, the notional of a futures contract is the point value times the price of the of the contract in this case. So look at that. Hey, there we go. We got into this trade. It actually is starting to move back to the upside. No guarantee that it'll continue to do that, but we're going to look at taking that to the upside. Let's review really quickly what we've done here. We are long the MGC, the gold contract, and we are short the M2K, the Russell 2000 futures contract. So that's what we've done here in this discussion. A couple of things if you want to learn a little bit more. Remember, you can come over here to the Trader Talks webcast page and you can type in futures and get more information here. You can see all of that playlist and those discussions. Great stuff from Michael Fairborn, who's been teaching this class on an ongoing basis. And then if you want to see the forward calendar, again, you come over here to Schwab Coaching. By the way, we're going to be in a bunch of places coming up live in our live events. We're going to be in Seattle coming up, not this weekend, but the weekend following. We're going to be in Atlanta. We're also going to be in Chicago. This registration is coming pretty soon. That's going to be an advanced option strategy workshop, which is going to incorporate some futures content as well. So if you want to join us for that, keep an eye out for that to open up. Scottsdale is going to be a great event as well. It's nice and warm in Arizona in March. It's beautiful down there. So we hope that you have the opportunity to join us for that. But again, my thanks to Michael Fairborn for helping out and for our great production staff and to all of you for being here. Have a great day, everybody. We'll see you soon. Take care, everybody. Bye-bye.